Let's go ahead and address the elephant in the room, the topic that has come up over the last couple of years, and that is, do you pay off your mortgage early or do you invest? Let me know in the comment section, drop that. Before I even get started with this video and share my take on it, I'm going to talk about 6 categories that you should consider regarding whether you should pay off your mortgage early or whether you should invest the money instead. So I want to hear your thoughts and your commentary on it, and then I will chime in on mine. Hi guys, if you don't know, my name is Nisha, and I am sharing budgeting, mortgage-free, saving, as well as side hustle content. And this is one of the topics that has come up quite a bit. If you do not know, I am mortgage free. I have been since August 2023, and I'm going to give you my take on exactly what I did at the end of this video, but I'm going to share with you 6 factors or things that you should consider if you are looking to pay off your mortgage early or invest. And what I mean by invest is invest in retirement funds, mutual funds, ETFs, stocks, as far as you retiring either at a traditional age or early retirement. If you are not already subscribed to the channel, make sure that you subscribe to the channel so that you don't miss out on any of the uploads that I do. And if you are a returning Bacon Bit Squad member coming back, I appreciate you. Make sure you would sprinkle those bacon bits in the comment section, and I will make sure that I answer those back for you. The first category or thing that you should consider is regarding the interest rates or your investment returns. Let's talk about the mortgage interest rates first, because we know that they have been fluctuating. Right now they are a bit higher than what they were a couple years ago. 2021 to 2022, when everybody was refinancing and getting those super low rates of 2.2%, I mean up to 3%, but currently we are looking at between 7, almost 8% as far as the average rate. So let's look and talk about, if you have a mortgage interest rate that is really low, you may go ahead and consider not paying it off early. That may not be the best financial move for you. You may want to go ahead and continue paying your monthly principal amount as well as the interest amount that you are accruing as far as your mortgage. And so that may not be the interest for you as far as paying it off early, because you do have such a low interest rate. Now, if you have a higher interest rate, then you may want to go ahead and consider putting extra towards your mortgage principal only after you have figured that into the budget and you can see what is allowed. On the flip side of it, let's talk about the investment return. So the stock market typically returns an average of about 7 to 10% annually, long term. And so you may want to look at, instead of paying off your mortgage, putting that money towards your investment. And that may be the better way for you, because you're looking at it as far as, in the long run, I will be gaining more money and with compound interest over the lifetime than me paying off this mortgage and dumping all this money onto the mortgage principal. That is the factor or category number 1 regarding the interest rate for your mortgage and those investment returns. So let's talk about category or factor number 2. Financial security, peace of mind. There is a significant peace of mind that you have when you don't have a mortgage payment. And this can improve your financial security as well as reduce the stress in your life overall, especially during economic times that are not good, such as now when we have inflation that is running rampant. But on the flip side of it, if you were to invest and or have that money readily available to invest, it gives you more flexibility and have that money liquid for you, meaning you have that money accessible and ready for you whenever that you need it. If you're putting the money into your mortgage principal payments, then it's tied up in your mortgage principal payments. There's no way that you can actually get that money back. Or having that cash on hand and it being flexible for you, then you may not want to pay off your mortgage early. But if you are looking for that peace of mind, stress-free, then that may be the way to go. Next, let's talk about some tax considerations. For the mortgage interest, and I know that when we used to file taxes, we could get a deduction regarding our mortgage interest. Now, a lot of homeowners now itemize. It's basically you can get the standard deduction, which is a bit higher. The tax benefits of having a mortgage are minimal. Now, I know that many people are going to argue that, and this video probably will be very controversial. For us, it just wasn't enough. It just wasn't enough at all. So as far as instead of paying extra on your mortgage and the investment side of it, you may be able to go ahead and get more capital gain from those investments in your stocks, your bonds, your mutual funds, ETFs, all of those things. And I'm just going to share a little bit about capital gains for you guys, just so that you know exactly what it is. It is basically like the profit that you have made off of the money that you have invested. The fourth consideration or category that you should take into account when thinking about if you should pay off your mortgage or invest is the risk tolerance. Now, what I mean by that is for the mortgage payoff, it's a low risk strategy. Okay, once you have your home paid off, you don't have to worry about making those monthly payments. You don't have to worry about them saying that there's an escrow shortage every single month, or dealing with interest rate fluctuations. If you have ARM interest rate, which means that it fluctuates every so often and it's not a fixed interest rate that you have. Also, now you will have to pay property tax and homeowners insurance. However, those are things that you would have to pay anyway on your own, even if you did have a mortgage. But I have found that paying those things on my own has been very freeing. I can put the money in my own bank account, in my high yield savings account, and it can earn extra interest for me, which has been very, very nice. So yes, even though you have to pay property taxes, and we can talk about that at another time, because I know people will say, well, you don't really own your home if you have to pay property taxes. That's just something that is set up for every person, all right? And that will be until I leave this little green earth. So the trade-off for me is that's fine. I pay the property taxes on the home. I don't have a mortgage. Now, on the flip side of it, so investing in the stock market, it does come with some risk. While historically mortgage interest rates have not outperformed investing, there's no actual guarantee that you won't lose money while you are investing. So if you are someone that is investment shy or not knowledgeable in investing, and you just start dumping your money all into investments because you feel like that is the best way to go, then you could be setting yourself up in order to lose out on a lot of money. Obviously, you need to make sure that you do your own due diligence as far as anything that you invest in. Make sure that it's something that you believe in. Make sure that it's something that you have researched yourself to see about the company, how long they have been around, their track record, going back 10 to 15 years at least regarding the company, if they will be a good fit for you to invest in. That is not to say and to scare anyone off and say don't invest. However, you need to make sure that you're making an informed decision regarding investing in anything that you do. All right, so the fifth thing that you may want to go ahead and consider are your other financial goals that you have in place for yourself. So, for example, for retirement, if you haven't saved enough for retirement, prioritizing, investing for it is probably an important thing for you to do. So you may want to look at paying off your mortgage early so that it helps to free up that extra money that you were using for mortgage principal payments in order to now invest that money. You'll be able to maximize your 401k or your IRA that you have in order to ensure that you are more financially secure in retirement. Also, an emergency fund, or forever fund as I call it. You also may want to make sure that you have an adequate emergency fund before paying off your mortgage. So if you don't have an emergency fund and all your funds are tied up in the home, again, then you have no way to mitigate and or help alleviate that emergency. At that point, you're then relying on credit cards and or personal loans in order to get you through. Now, there's nothing wrong with that, I will say, and I know this is going to be controversial, but I know that there's nothing wrong with that if you have a solid plan in order to pay off those credit cards and the personal loans quickly. If you don't have a plan to pay off those credit cards and personal loans quickly regarding the emergency, then that may be something that you want to think twice about. Now, I do know an emergency, anything could come up and anything could happen. So you probably like, hey, I may not have time to try and figure out a plan. But if you do have time to figure out a plan, big if you do have time to figure out a plan, then make sure you are looking at that so that you can pay that money back as quickly as possible and get back to the things that you need to do as far as your financial budget to put you in a good, solid place. You balance those long-term goals with those short-term needs that you have, and that will help you by having an emergency fund. But again, you have to look at both of them as far as your retirement savings, whether you feel like you'll have enough, or the emergency fund. And the sixth thing that you should consider thinking about paying off your mortgage or investing is the stage of life that you are in at the moment. So if you are young or you're early enough in your career and you have many years ahead of you to invest your money and to let it grow, and your mortgage interest rate is low, investing may be more beneficial for you in the long run. If you are older or you're nearing retirement, then paying off your mortgage might be more attractive for you so that it can reduce monthly expenses as well as make it easier to manage your fixed income if you know especially how much you are going to be bringing in regarding a pension and or Social Security if those are available to you. So you want to make sure that you weigh both of those regarding the current stage of life that you are in. Now, for me, I will just discuss and say that I did a little bit of both because I think that you should have a balanced approach to it. I don't think that there's a right or a wrong way, and I know that some people will probably argue that in the comments section. Argue amongst yourself. But I think that you should have a balanced approach for it. Yes, I was aggressive as far as putting more towards our mortgage principal because I knew I had a goal in mind. Also, I'm one of those individuals that when I become hyper-focused on a goal, nothing stands in the way of that goal for me until that particular goal is accomplished. And so for me, paying off the mortgage was a huge goal that I wanted to do because I don't know anyone personally that does not have a mortgage. Yes, I have my mortgage-free friends here on YouTube, but in real life, people that I know that I can physically touch, see, and all of that, I don't know anyone that actually has their mortgage paid off. So that was a huge goal for me and motivation for me, along with some other factors. But while I was also paying on my mortgage or paying off my mortgage, I was also investing. Now, I was not investing as aggressively as I am now because I have more disposable income to work with now that I've paid off my mortgage, but I was still investing a nice amount into my Roth IRA as well as some ETFs that I have. And I was able to start doing more once I paid off my mortgage. So for me, doing both was good for me. Some may argue that, well, if you would have just stopped paying off the mortgage and then go ahead and start putting more towards your investments, you would be further along. And yes, that probably is true. However, I did what was working best for me. Our mortgage rate at the time was 3.25%, and that is what we had from a refinance mortgage in 2016. I had no interest in actually refinancing again in 2021. So we were already at $92K February 2020. And that is when we started aggressively putting more towards the mortgage principal. Give me your thoughts in the comments section regarding what do you think about paying off your mortgage early or investing instead? Do you think it has to be one or the other? Or do you feel like you can do both if you had the choice? Now, I know some people are like, I don't even have a mortgage. I can't even think that far yet. But think about it with anything that you have. What about just maybe some consumer debt or some other debt that you have? And also investments that you have, okay? Because mortgage debt, consumer debt, it's all still debt. So let me know in the comment section what you think regarding the factors that you should consider And also, what would you do? If you happen to enjoy this video, please let me know in the comments section and make sure that you are subscribed as I stated earlier. Until the next video, guys, bye.